Hello again. Good morning, good afternoon, good evening. Welcome back. If you're new, welcome to you. I'm just going to do a quick rundown of what the portfolio has been up to in the last couple of weeks. It's been about 2 weeks since I made a video, and not a huge amount of change. I've added a new position, and I've been on a little bit of a downtrend. I don't know if that's just growth, but the portfolio overall up here has dropped about 2% recently. It looks as though some of the gains of the bear market rally that we had, a little mini bull run, they have been slowly seeping away, as you can see. Now it's kind of expected at the moment that all assets are going to be quite shaky. There's absolutely no guarantee of what's going to happen. All we can do is hope for the best and not take too much risk. A little bit is just enough. But there's been a couple of new additions, and the first one is actually Amazon. I have an affiliate link, and if I invite anybody through this link, they open up an account and verify their identity. Both of us get free shares. So I'm going to pop the link down in the description. And if you do decide to use it, it will pop up on my account that somebody has. I would appreciate it if you let me know what shares that you got, because I was given about €78 worth of Amazon shares, which is really good. 0.88 Amazon shares. And thankfully, these were given to me after Amazon's fall from grace, which I assume that they will recover. They've like 1.5 million employees. Yeah, plenty of wiggle room, as they say. Negative earnings per share at the moment, but it's kind of to be expected. You know, they went absolutely wild when everybody was at home ordering stuff from home, and it's slowly coming back down to reality. But anyway, if you do decide to use the link, thank you very much, and I would appreciate it if you let me know what company you got shares of, and I'll do the same. But anyway, apart from Amazon, I added another company, I3 Energy, and this was suggested to me in the comments. It's based in the UK, pays every month, a dividend every month, and its current yield is 8.8%. Now it has a flat earnings per share, so profits obviously aren't great. And I haven't done a huge amount of research into them, but they're in the oil and gas operations industry. And this was suggested under the last breakdown video I did, which was Cross Timbers Royalty Trust, which was a similar looking company, but it was an express trust. CRT was. This is an energy company itself. So we'll see how this goes. Definitely worthy of a €100 bet to hold on for life. And thank you for the suggestion. So the fundamentals of the portfolio are as follows. I have invested 12,000 and about €12,200, and I have a lump sum to invest today, which is €306.90. On the dividends front, I have received €435, and in realized profit or loss, I have about €1,800. So it's slowly gaining traction. And that actually reminds me, I have upped the automatic daily deposit to €5 per day, which is in here if you're using Trading 212. Deposit schedule. So every day €5 gets deposited into the account, and then that plus any dividends get reinvested immediately, and then any of my income that I can invest as much as possible just goes straight in. But at the moment, I think I'm going to use this 300 that I have to bulk up this group. These are, now they're not actually called the Dividend Titans, I just kind of gave them that name, but these companies, they are all US. They have not missed a dividend payment for the last 100 years, unless this year they missed one and I just haven't realized yet, but I will update it at the end of the year. So if you are interested in any companies that have about as safe a dividend as you can get, you know, a very good lifetime worth of dividend history behind them, that's all of these. And as you can see, a lot of my positions are falling. Look at all that red. General Mills doing well, fair play to them. DuPont doing well, but the majority of them are down quite a bit, like 20%, 16%. Some pretty bad ones, 30%. Stanley Black & Decker, and that's Black & Decker is in the construction equipment, tools. and Stanley as in Stanley tools, to Stanley blades. So I think I'm going to put €100 into here, and because the US markets are open, it should actually go in immediately, and it will I'll put it on self-balancing. So that means it will give more to the stocks that are further in the red. It wants each one to be a certain percentage, which I've decided. So about 3.9, and I'd say there's a few 3.8s in there as well, just to have them as even as possible. And now it will give a larger portion to the ones that don't meet that 3.9% benchmark. So this is an idea of how it's going to be distributed. Yeah, look, Stanley Black & Decker is going to get €8. So, fire away. So that's €100 in. Oh, nice. Look at all that fill in those gaps. Lovely. So, very rapidly, brought them all up to about €15 each. The last few should come along now. And now I can put another €100 in, and I think it will have to be into bonds. Because I've recently stated that I've discovered that bonds seem to pay every month, which was, I knew that there was some that did, but it seems like a lot of the ones I have do. So I'm going to take advantage of this lump sum that I have. I'm going to put €50 into here to self-balance, €50 into here, and then €50 into here. And these are bonds. They're separated in my portfolio based on the currency that they're denoted in. So this one, they're all in dollars, but we've got corporate bonds, treasury bonds, emerging markets, government bonds, corporate 1 to 3 year bonds, and US dollar emerging market sovereign bonds. So I'll give that a nice little boost, and also self-balance. There's not a huge amount of variation between them. Okay, so when the London Stock Exchange opens, that will go through. I'm going to put €50 into these ones, which is bonds, but they're denoted in pounds. A gilt is just a government, another way of saying a government bond. Eurozone government, treasury bonds, corporate bonds, all the different flavors. So I'm going to put another €50 in there. And the third one, bonds denoted in euro. So a little bit more variation here. I've got 18 different ones, which is actually handier because my account is already in euro. So it just means that there won't be any foreign exchange on either side of the trade when I buy in or when I receive the dividends. It won't be converted, which is handy. So I'm going to pop, I think, because there's so many, I think I'm going to put €100 in here. Now, just to kind of balance it out a little bit. Because there's 18 investments, so if I put in 50, it will give each one like €2 or €3. It's not great. So I'm actually going to put €100 in here. Yeah, it looks like quite a nice spread. Each one gets about €6. Not fantastic, but there is a lot of them. And I have to wait for the London Stock Exchange, the Deutsche Börse Extra, which I probably butchered, that's the German one, and the Euronext Amsterdam, which is the Dutch one. So after they go through, I should be up to, what have I got? Oh, I've got €6.90 left, so I think I will put that into my newcomer, which is I3 Energy. Just to give it a nice little boost. Welcome to the collection of stocks. You're about to place an order for an AIM listed security. Stocks that trade on the SETSQX segment of AIM suffer from low liquidity, which may result in your order getting delayed indefinitely. Do you want to proceed? Yes. Now, I wouldn't really feel comfortable putting my life savings in here after seeing that, but the strategy that I'm implementing is to have about €100 in 1,000 different positions. That's just for now, and that will be the €100,000 foundation of the portfolio, which should be a strong foundation. But the idea behind it is, rather than, say, picking 20 companies and then keeping track of them, having those panic days when they drop 30% and you don't know what to do, and And on the other side of that coin, having the fantastic days where it's up 30% and you're tempted to sell. With this strategy, I kind of swap all of that emotion and all of that stress involved in the stock market. I switch that out for the chore of having to log all of the dividend payments manually myself. And the reason I have to do that is for tax reasons. I have to separate what came from the USA, what came from the UK, what came from Europe. I have to do that chore and go through thousands of dividend payments every year. Like, this is more comfortable for me because I don't worry about what a company is doing. I don't even worry about hearing about a bankruptcy, to be honest. If GN Store Nord is going to go bankrupt tomorrow and I have no idea, the most I could lose if this has gotten to my €100 goal is less than 1% of the overall portfolio. So that's it for this one. And I hope that the markets are not too rough for you out there. I know today was a bit of a red day all around, and it's been a red year, apart from the last month where everything kind of popped off a little bit. But enjoy yourself and be safe. And if you have any suggestions, I'm all ears.